Interest rates are set to go up by as much as 50 basis points, or at least 0.5% today. This is as rising fuel and food prices put pressure on the economy and indeed consumers' pockets. Also, many people are paying off their homes, and that brings me to the discussion with my colleague Kopano Gumbi. I know that you're about to speak to someone who's much more knowledgeable more than you and I are, particularly around the housing market, Kopano. People are paying rent, people are paying off bonds, and inflation is having a huge impact on this element of consumers' pockets.
Absolutely. Us in the business community like to call it inflationary pressures on the housing market. But really it just means that prices are going up, and we know that and we see it all the time. Homeowners are asking for more rent, and the banks are asking us to pay more as interest rates continue to go up. And so that is what we would consider home or housing inflationary pressure, which is definitely increasing at this time fully.
Yeah, well, let me not waste your time. I know that Caroline is standing by to talk to you. So take it away.
Absolutely, Caroline. Thank you for your time this morning. As Bully and I were just talking about, we are noticing that there is some pressure that's being built in to homes. And ordinarily, an increase in housing and home buying is a good sign of a healthy economy because people are comfortable, they're willing to take on more debt. Are we seeing a similar trend in this first quarter, even though we expect rates to go up?
Yes, good morning, and good morning to all the viewers as well. So absolutely, it's been a very interesting time to observe the property industry. And recently, ABSA has released their homeowner sentiment index for Q1. And this is really where we go out into the market and we ask consumers, what do they feel? How confident do they feel about home ownership in South Africa? And the Q1 results, actually, we were very encouraged to see, actually increased quarter on quarter to one of our all-time highs since the inception of the index in 2015. So positivity in the property industry is still there. What we are absolutely monitoring and observing is obviously the impact of the macroeconomics onto that growth that we've seen in the property industry.
No, absolutely. And I wonder, often, I mean, in the last year, we've spoken because of these record low interest rates, lots of first-time home buyers, lots of women especially, which is very exciting, coming into this market. Is that similar? Is that a similar trend? Are you seeing that as well with the number of applications that are coming in for new homes?
Absolutely. So, in 2020, what we call, I guess, post the first lockdown period of COVID, the property industry was definitely driven by the first-time home buyer. And in our index, they largely cite low interest rates being one of those main reasons. So what they were paying for a monthly rental, they could actually then pay a monthly mortgage bond, and they could own their own home. And we saw the surge in first-time home buyers. What has been interesting, and the trend started to tip a little bit in 2021, and we are still seeing it in 2022, is that the resurgence of the existing homeowners started to come back. So first driven by first-time home buyers, but now existing homeowners looking to still leverage the relatively low interest rates to upgrade their properties, expand. We're all spending a lot more time in our property at the moment. We're wanting a garden, we're potentially wanting a home office, we're wanting to take that first step in wealth creation and buy that property. So we're definitely still seeing a little bit of a mix coming through, but we are also seeing, and consumers are telling us in our index, that they are still starting to feel that little bit of pressure coming through with regards to job security, financial security, and economic inflationary and interest rate sentiment at the moment.
Where do we see the most growth? In which property bands? Is it people who are buying in the 500,000 to $1 million mark, $1 million and above? What do the stats look like?
So during the first-time home buyer boom or growth, we definitely started to see that between the 850 into that 1.1 million range, which is really the heart of the first-time home buyer bands. Since the resurgence of the existing homeowners, we're starting to see that those bands are starting to increase. So we're starting to see a little bit more between the 1.2 to the 2 million. We have started to see some emergence and revival in the upper ends, the more luxury purchases of the properties and so on and so forth. So that has started to come through, whereas in the heart of 2020, 2021, it was largely in the lower bands of renters getting into that first-time home buyer market.
Caroline, a 50 basis point increase, 0.5%, it's not going to be a small amount when you think of what we pay back on our homes. It's going from around 7.5% to 7 or 7.75 or maybe even 8% interest on your property. How should homeowners be looking at the increase in their repayments that's going to come in just 1 month?
So absolutely, Kopano. I think, the impact of the interest rate hikes, and we've seen 3 consecutive already, and again, as you mentioned, anticipation of that interest rate hike today. ABSA is still predicting 25 basis points at the moment, but we are absolutely acknowledging that there's an elevated risk of that 50 basis points, especially on the back of what we're seeing in interest rates exchange rates at the moment. And from a property owner's perspective, it is going to impact disposable income. It's going to impact affordability from a consumer's perspective. I mean, we're already feeling it in our day-to-day lives with the impact of petrol costs, food prices, so on and so forth. So we are all watching that impact on the customer's affordability. It is probably going to impact more of the lower end of the market, our affordable housing market, and even our first-time home buyers. What we're seeing in our sentiment index at the moment is that the renters, so those who don't currently own properties, we have definitely seen more of a shift in the positivity of renters at the moment, and this is supported by the increase in vacancy rates that we're starting to see at the moment.
Caroline King, thank you for your time. That's Caroline King of ABSA Home Loans. There, Polly, you heard her. Maybe we might spend more time in our homes now as the interest rates go up because everything else is expensive.
I can't imagine the people who rushed to actually buy themselves homes, and rightly so, at that time.